While the fight by potash to avoid BHP Billiton's $39 billion hostile takeover continues, this time with news that Sinochem has appealed to the Chinese government for support as it intends to make a counterbid for the Canadian fertilizer maker. The Economic Observer, a Chinese local newspaper, cited sources who said a preliminary assessment that has shown that Sinochem would require $40 to $60 billion to top BHP's offer. Philip Aiken, he is chairman of Australialive, joins us now to discuss the Australian companies, their recent drive for expansion, and the growth potential that we can possibly see down under. Philip, thanks very much for coming in.
Yeah.
I don't want to put you in a spot, but I know you were on the BHP board. So let me put a question to you from what you could have potentially seen if you were still there. If BHP sees Sinochem come in, do a little tie-up with the Chinese government, try and top their bid, what position does that leave the board in? And what can they possibly do to top it?
Well, as you said, it's 4 years since I worked for BHP Billiton, so it's pretty hard for me to comment. But it strikes me potash fits the portfolio for BHP, long life, low cost asset. I suppose price is an issue, and you can never, in an acquisition, give up any opportunity. So I can't really say, but I think there's obviously a good business, and they'll look at all the opportunities.
Do Australian companies like BHP have unlimited money? Because BHP has said they will cap it at some level. They will not go crazy in this bidding war. And the Chinese possibly need, say, fertilizer and potash more than maybe BHP, say, needs potash as a company, as an acquisition. Do you think Australian companies can rival Chinese companies when it comes to getting key target acquisitions?
Well, Australian companies have the great benefit of the superannuation funds which are available in Australia. But I think BHP, right throughout the years, has been very disciplined with its capital expenditure. And I can't see BHP going mad and overspending. But as I said, I think there's lots of opportunities here, and there's probably quite a long race to be run.
Philip, I know that you're in London with Australialive, trying to sell Australia as a business destination and a destination in many senses to the UK population, which I wouldn't have thought was the hardest sales pitch in the world. I've heard harder. But one thing that has spooked the investment community a little bit about the Australian market recently has been the mining tax. Tell us how, the government is pushing ahead with this tax. It's been an incredibly divisive issue even within Australia, and from outside it does look like a pretty anti-business measure. Explain it.
Well, Australialive, as you said, is to actually sell Australia to the UK, and it's about a series of seminars and forums to look at investing in Australia. Last week we had a CEO forum, and the issue of the mining tax came up. And I think it's a great example of why Australia is a great place to invest. You know, the government came up with the mining tax. It was opposed strongly by the miners and the public, and it led to a change of Prime Minister. There's now been a new election, and the new government has said it's going to review the taxation in Australia. And I suppose this is a great benefit of living in a democracy. I mean, if you're investing in resources, there are some pretty nasty places around the world. You've seen what's happened in the Congo recently with First Quantum. And I suppose Australia, being the stable economy it is a great place for mining investment, and I think this mining tax, it'll get resolved.
You in your earlier comment, alluded to the superannuation funds and what a support they were for Australian companies. Could you expand on that? And the reason I ask the question is, in Australia, with the superannuation funds, but also in other parts of the broader Pacific region, I increasingly hear about those big investors, institutional investors, looking to invest outside the region for diversification purposes. What is the balance between investing in Australia for them?
Well, I think Australia is a country of 22 million people. It's got an economy of $1.3 trillion, and about 570 billion is in trade. People don't realise how much the services trade is growing. But, you know, for a country of 22 million people, there are so many investment opportunities. And therefore, I think you see Australian companies being much more aggressive. For example, during this last week, we've had a consumer exhibition looking at Australian food, wines, various things out at Westfield, London, and just look at the investments that, say, Westfield have made here in the UK. So Australian companies, I think, are very well set now with good financial backing, I think, to look at other parts of the world, as they have been.
Australian companies have traditionally been very good at leveraging the proximity and their geographical location to the Asian story, and that has to be one of the great sales lines at the moment, isn't it? That this is an economy that can look both ways, if you like. It has historic links with Europe.
Yes.
It has geographical links and now very strong financial ties with the very fast growing parts of the world. How concerned are you, though, about if we see moderation in the Chinese growth story, for example, that's going to have a knock-on impact onto Australia, isn't it?
Well, China is definitely the powerhouse of the region, and everyone talks about China. But the other economies are growing quite strongly too. And, South Korea is still growing, certain parts of Southeast Asia. And Australia being on the same time zone and having the infrastructure, and these days, it's very easy to fly from Australia to anywhere in Asia in a very short period of time, makes Australia a natural base. And that's one of the things we're promoting very much as part of Australialive, the fact that Australia is a great gateway into Asia for companies out of the UK and Europe overall.
But overall, is the focus more on the Asians? Because you have a number of big conglomerates out of India trying to compete with the Chinese for resources, trying to compete for banks, trying to compete for other companies in Australia to get that foothold that they can't directly into China or into Japan or into markets that the Australians have access already to. How much of a focus are you giving to ex-China, rest of Asia?
Well, if you look at India at the moment, I saw some figures the other day at our Australialive CEO forum, which showed that in terms of coking coal, the Indian market will pass China in the next few years. That's because they have no coking coal in India. And you also see some of the Australian banks now moving into India in quite a way. So I don't think Australia's just thinking about China. I think Australia sees itself right through that whole area of Asia, going through from India, right through to China, right through Southeast Asia. Australia these days also has an enormous amount of students coming from that part of the world. In fact, Australia is one of the largest countries now for business education. And, with these people being trained and being educated in Australia, the links are becoming even stronger than they have been in the past.
Philip, thank you very much for joining us today. Good luck with your promotions. Philip Aiken, Chairman of Australialive.